Okay, think we are live here. There we go. All right, guys. So I just want to go over this stupid, simple, very simple. Like again, the thumbnail is not misleading. This is probably Nancy Pelosi's trading strategy. I don't know, but in this video, I just want to go over a trading model that I think could be very helpful to some people, especially people that maybe like to take more trades instead of somebody that maybe is okay with just taking a couple trades, like myself. And this is something that I've been kind of forward testing and playing with for about a little over a month now, and it's been working very effectively for me in the forward test data. And I just want to share it with you guys. But real quick, before I get into this, just like I say at the beginning of anything, if you do not let the math play out, if you are still struggling with your emotions, it's not going to work, okay? But if you can literally draw a rectangle on a chart and follow along, I'm telling you, this is pretty effective. So let's get onto the chart here. And I just want to do this. Now, I'm doing this live because I did do this. I did this on actually recording it, and it just was a massive fail. I kept having technical issues. So we're just going to do this. All right. So, what I need you guys to understand before I get into this is just like I tell you, no matter what, is you need to understand market structure. So, the main premise of this YouTube video, the main premise of this strategy is three main rules. Okay, three main rules and one indicator. Number one is you need to understand market structure. Market structure, what is it? Bearish, bullish, or consolidating. Okay, so if we're making bullish market structure, meaning we're making higher highs and higher lows, or if we are making a consolidation market structure, meaning we're just chopping sideways, kind of ranging, right? Or are we making a bearish market structure, meaning we're making lower lows and lower highs? Okay, the market can only make these three moves. And the reason why this is important to understand is I tell everyone this in my Discord. I say this on my YouTube channel. I always repeat this when it comes to me trading live is if we're making higher highs and higher lows, the moment a low, if it's bullish, breaks this previous high, and then we candle close above this high, this means that this low right here is protected. It is a very important low, okay? And then vice versa, if we're making bearish market structure, okay, and we have a high that breaks the low, this is an important high. This is a very important high. It's market structure 101. This is something I've always talked about. So if you understand these very basic rules that if we're making bullish market structure, here I'm on the NASDAQ. Let me turn this little indicator off. I'll go over that here in a minute. You can see here, we have a higher high. We broke this higher high. So now this low is a good, important low. Then we make another high. We break this high here. Now this low is an important low. And we keep seeing this bullish market structure with higher highs and higher lows take effect. And then what happens on the flip side? You can see right here. When this high on the hourly time frame, this high was the responsible position for making all-time highs on the NASDAQ. As soon as it got broken, what happened? We started entering bearish market structure, where now this high is an important high because it was the responsible party for breaking this low down here, right? Does that make sense? And then if we have a pullback, okay, and then we break this low here, now this is an important high. And we're actually playing with it in real time, in real price action here. Okay, so this is very important to understand. Now, the next thing is understanding how within market structure, when are we going to shift? Simply put, when a high or a low is broken and it shifts in the opposite direction, in this case, you're seeing this live with price action in front of me. We had this lower high. Now we have closed above this. So now we're shifting bullish. Okay, very simple stuff. Now, I'm personally going to be using this in the afternoon time frame because I trade with other models in the morning. And I'm totally fine doing something else in the afternoon if I have time to do so. So I'm going to show you guys how I'm going to be doing this in the afternoon time frame. And you can use this with any asset, anything else, doesn't matter. So now that we understand the market structure, we're going to add this little SVP HD. So all this is a session volume profile HD. All you got to do is go to your indicators, literally search session volume profile. It is free. You just add it to your chart. What this shows you, and I used to trade this a lot when it came to crypto, is it shows you volume and pointed controls, and all these pointed controls are they either usually act as a support or a resistance. Okay, this shows you where all the buying pressure and selling pressure is taking place, all the volume, and what takes us to our take profit and stop loss. Volume. We need volume in order to take any trade, get a trade to a take profit, get a trade to a stop loss. So we need to understand where the buyers and sellers are making a lot of their transactions, right? Where a lot of the drama that I like to say is being taken place. So if we go back in replay mode, and I don't want you guys to think I'm cherry picking trades, so I'm going to go back even farther live in front of you guys here so that way you can see it being demonstrated in front of you. So if we just reenact like we were sitting here trading this morning and we wake up, all right, cool, it's 8 o'clock. All we're going to do is highlight the point of controls, and we're going to see on the hourly time frame how are we reacting from these point of controls. Very simple, right? And if we have a close above this point of control, that means the buyers are starting to take charge of the market. They're starting to step up. And vice versa. If we have a close below this point of control, the sellers are starting to take control. We add this in combination with what we see in the charts with bearish or bullish market structure, and then we can start to determine, okay, are we only going to be looking for longs, or are we only going to be looking for shorts? In this case, we can see buyers are starting to step into control. You can see they're starting to use this point of control as an area of support. So now I'm only going to be looking for longs because that's where the volume is telling me. The volume is telling me we are going long. Now, again, you could be like, well, Austin, you're probably hindsight trading. Again, I'm going to go in back further and just randomly show you guys some examples here. So we're going to go to the 1 minute time frame. Now, what are we doing on the 1 minute time frame? All we're going to be looking for on the 1 minute time frame is pullbacks into liquidity footprints. Okay, what is a liquidity footprint? All a liquidity footprint is just like on the 1 hour time frame. When we look at those huge wicks on the top or the bottom of the candle, it's the same thing we're doing on the downside here, right? We have a huge wick here, we have huge wicks here. All these wicks are telling us is buy or sell pressure, depending on what side they are on the candle. In this case, if there's a huge wick on the bottom, it's telling us there's a lot of buy pressure, right? Because why is that? These people that are moving the markets, they're leaving footprints behind. Okay, it's very easy to see. If price came all the way down here and buyers were able to maintain price and pull it back up like a rubber band, you know that there's a high likelihood if you get back into this area, there's going to be a snap. It's going to snap back up. And that's what you see here. Buyers bought that back up. And then vice versa. When you have these huge impulsive wicks on the top side, what is that telling you? That's telling you when price was up here, there's a ton of sell pressure that dragged price all the way back down. And then you can see here, price struggled to came up, and then we broke through. And again, this isn't something where you're just going to predict the market. This is something you can use to see when your entry points are available. So now, 3 simple rules, right, for this trading strategy. 1, market structure direction. Okay, and that's what we already did on the 1 hour time frame. We've seen that we were making lower lows and lower highs, but then as soon as we on the 1 hour time frame here, as soon as we seen this low fell to make a lower low, and as soon as we seen this high here start to maintain this high here, and we are using point of control as an area of support, the buyers are starting to step in. This is when we can see that, okay, we're probably going to shift the trend, or we're going to kind of alleviate this giant sell pressure that we're having here. So now let's go back to the 1 minute. And all we're looking for, and funny enough, I clicked the replay mode, and this is exactly what we were looking for here. But again, I don't want you guys to think I'm cherry picking trades or anything like that. So number 2 is we're looking for volume profile reaction. We already did that, right? What we did there was we were looking for, put number 2 here. We were looking for how did price react from that volume profile. Again, it's acting as support. It's closing above that point of control, telling us that the buyers are stepping in. And you can see that right here. We closed above point of control. Get rid of that again. And then number 3, for our entry, we are looking for pullback into liquidity footprint. All right. And all this is, when you combine all 3 of these, This is the model. That's literally it. 3 rules. Are you bullish? Are you bearish? Have we reacted to the volume profile in a bullish or bearish way? And then we drop down to the 1 minute time frame. I can even specify right here. 1 minute time frame. And we're just waiting for a pullback into a liquidity footprint. That's what I'm calling it. I don't know if that's a good word to describe it. So again, you see here we have a liquidity footprint or a huge impulsive wick telling us there's buy pressure here. So we're just waiting for price to pull back into this area and then react bullish, okay? I'm not taking a trade off of a bearish candle. I'm taking a trade off of a bullish candle that reacts from this little footprint here. Okay, so we can see. Let's simulate like we were going into a long. And I want to show you how crazy this is if you actually get into the trade and it works and you start to manage it properly, okay? So just like I told you guys before, if this low is responsible for breaking this high, which it was, this is an important low now. Because if we break below this low, we're probably going to just keep on going bearish, right? So I want to put my stop loss below this low because it makes no sense to put it anywhere else. This is the only logical place with this model to put my stop loss. So I'm going to just paper trade this and simulate like I was to just do one contract here on the futures contract for NASDAQ, just like I was taking a long here. Now, this is the cool little thing that you guys can see. So now we're just going to simulate like we're in the trade. A little bit of drawdown. We're going to come back up. Now, why is this important? All I'm going to be doing, and notice how I didn't set a take profit, because all I'm doing, let me move these rules over here, is I'm looking for a low to be broken to tell me, to let market structure and price action to tell me that it's time to get out of the trade. Now, again, I'm not trading this in the morning. I'm just showing you guys an example, and you can take this and run with it with any asset, any time frame. It doesn't matter. It's time frame or whatever specific. You can use this with anything. So you can see here we had this low. We came back until this low gets broken. I'm still going to be in this trade. And then all I'm looking for to manage this trade is a pullback to happen in the middle of this trade. And then if a low gets broken in this pullback, and we're just going to keep on making bullish market structure, then I'm going to get out of the trade. So I'll show you guys how that works right now. So boom. Okay, so we had this pullback, all right? We had this pullback, and now this low is responsible for making a new high. Again, very, very simple. Here's the high. Oh, there we go. Here's the high. We broke the high. Candle has closed. So now, if I wanted to trail my stop loss, people always talk about trailing stop loss. If I wanted to trail my stop loss, I could put it there, but I really don't like trailing stop losses because you get wicked out and then you keep on going and stuff like that. So all I'm looking for as far as managing this trade is waiting to see, does this candle or does any candle close below this low? Because if I get a candle closure below this low, then that means that we're probably going to correct and I want to get out of the trade. So I will lock in profit anywhere here as soon as a candle closes below this low. But until then, I'm just going to let the trade breathe and I'm going to let the trade do its thing. So we're just going to keep on going. Okay, so here, look, another pullback. And what I mean by pullback, low, because we're on the 1 minute time frame, that's what I'm taking into consideration. So now we pulled back a little bit. We made a low. This low made a new high. So that again, if we close below this low, that's when I would close out the trade. Or, and the thing about this strategy is you can really personalize it to however you want to trade or however you like. If you're happy with this risk to reward, I mean, you can have a set limit to where it's like, hey, if I get whatever risk to reward this is, I mean, this is an amazing risk to reward. If you get a 7 risk to reward and you're risking a 0.25% of your account, or an 8% or an 8 risk to reward and you're risking 0.25% of your account, whatever, just stick to whatever risk management you want to do. I'm giving you guys the foundation, and then you can build this however the heck you want to, right? So in this case scenario here, you can say, okay, well, if I hit like a 10 or a 9 or an 8 or whatever, or if I'm just looking at dollar values, if I'm hitting a $2,000 profit, I can close the trade for the day. But let's just simulate like, again, I was just managing this trade until we break a low and price action tells me to get out, because I want you guys just to see the true power of how cool this is. And even my Discord doesn't know about this because I've literally just been practicing and watching this happen in the afternoon. It's been so crazy how consistent this really has been. So now we have a new low. Again, we're just trailing this up. This low here, and again, why is this low important? This high has just been broken. So now this low is an important low because if we break the low here, we're probably going to start making bearish market structure, okay? Because that's all it is. That's all we're doing here is we're trading the market structure of price. And again, that's why I don't like trailing my stop loss because you can get wicked. You can just watch it and then close out the trade whenever you close or like whenever a candle actually closes. So now look, this low was protected. This high was closed above. So then you would just keep letting the trade. You'd be like, again, Austin, are you just cherry picking this trade? No, I was literally watching this happen live, and I'm going to again go back in replay mode and show you guys a couple examples. Here's the low. This low was responsible for breaking this high. Now you guys are starting to see why I call this the Nancy Pelosi, right? I seen Snipey laughing in there. All right, so now I'm just waiting. Are we going to close below this low, or are we just going to keep on pushing higher? Boom. Right. This low here broke this high. Okay, so now I'm waiting for price to close below here to close out the trade, or just let the price keep on going. This low here broke this high. Letting it keep on until we close below here. Look, so now we're starting to kind of play around with this low. But until we close below, I will not close. Okay, so now we have a new important low. Why? Because this high, this local high, got broke. So now we're waiting to see if price closes below that low. All right, same thing. Again, you can just keep on. Look at this. Low here hasn't been broken. Low here hasn't been broken. Low here, low here. So now this is the recent low right here that is responsible for making a new high. So until price closes below here, I'm going to keep on holding the trade. And then now you get to current price. So in just today, I mean, this was just one trade. And again, you guys think I'm making this up. This is literally today. And I wish I had an actual live trade to show you, but I've just been forward testing this. So now what we're going to do is because this is live, I want anybody in here, send me an asset that you want. So we got 7 people viewing this right now live. Send me any asset that you want me to back test. But until I get a message here, I'll just randomly go on replay mode here on NASDAQ. So let's go to the 1 hour. And I want to shrink this so you guys don't think I'm cherry picking. So that, delete all the drawings. Okay, so let's just go back. We're flat right now. Let's go to, and keep in mind, I got to go to the 1 minute time frame, so I can't go back too far. But let's go to November. I think I may be able to go into 1 minute on the 1 minute here. Let me just make sure. Nope, I can't. So let me go back just a little bit more. Euro USD. Okay, cool. We'll do Euro USD. That was NASDAQ alpha. So let's go to Euro USD. Let me delete all my drawings here. Launch this down. We're on the 1 hour time frame. Okay, so now let's go back to November. Again, you can't go back too far in replay mode on the 1 minute, unfortunately. Can I do it? Okay, I can do it. All right. So now let's bring up market structure. Again, we're looking on the 1 hour time frame. So let's do a whole week of backtest, and then I'll hop off here because I got some more work to do. And I just really want to make this video quick to get it out there. Again, I tried recording it in good quality. Camera failed, so I was like, you know what? I'm going to do a live stream because I want to start pumping out more content for you guys. So we're on the 1 hour time frame. Let's just simulate like we were at 8 o'clock, okay? So now here's 8 o'clock. We have point of control right here. So what's the first rule? The first rule is, again, where are we at in the state of market structure? Okay, state of market structure, we are bullish, obviously. We have higher highs, higher lows. Okay, you can see this happening. This high was broken, so now we are bullish. And until these lows get broken, we're bearish. I mean, we're going to be bearish, but until these lows get broken, we're bullish. Okay? So, second thing. So now we got bullish. That's answer number one. Answer number two, how are we reacting to point of control at the start of whatever time we're trading? So if we're trading at 8 o'clock, you can see we've broken through this point of control. I'm going to highlight on the hourly time frame where these little points of volume are that I want to highlight just to see, give me some context on the lower time frame. We can see on the 1 minute chart we're reacting and bouncing off this using it as a support. So again, I'm still, until we close below here, the buyers are in control. So that's 2 for 2. Okay, so now again, we're really only looking for longs on Euro USD. So now, last answer to the text, I guess you could, or the last thing to do is to drop down to the 1 minute and look for those little liquidity footprints on a pullback, a bearish candle, so that way we can then get into the trade. So you can see this is that point of control from the hourly, okay, and you can even see here, I can add a text here, 1 hour POC, point of control, so that way I can have it annotated here. Okay, and now we're going to just see, here's a pullback right here. Again, I'm just using bearish candles because I'm looking for a bullish, reaction, then vice versa. If I was looking for shorts, I'd look for a bearish reaction off of a bullish candle. So we're looking for, we got all this little footprint right here, and I'm just waiting to see if we react bullish. Okay, we miss it. That's fine. You just keep on looking for these footprints right there. Boom, big bearish or a big bullish footprint. You just keep on highlighting these until price comes back to one of these areas right here. So price breaks through this one, so I'm going to delete it. We get into this giant footprint right here. I'm just waiting for a bullish reaction off of any of these areas or any of these levels. We get this reaction right here, so we come into this area where there's a ton of buy pressure, and it's the point of control on the 1 minute time frame. Here is the long opportunity. Again, this will lose. Okay, this is not just a 100% win rate strategy. My stop loss is going to be below that previous low here because it makes no sense for me to be in this trade, right, if we get and break below here. So now we're just going to let this trade run, and we're going to see, do we get stopped out? And we do, and we're just looking for another bullish reaction, which we get right here. So another reaction, we come down, we get wicked out of that position, we then, boom, explode back up here, stop loss right below here again. So we're 0 for 1. And we're just waiting for price to tell us to get out of the trade. Okay, and what does that look like? We're again using market structure to tell us. So here is the trade. We're already making a pullback that has made a higher high. So we're going to now say if price closes above here, which is pretty much an entry, so it'd be like a break-even trade if price does, we're getting out of that trade. Or if price breaks this high, now we're going to be looking for a new low. Okay, so now we break above this high, and you guys see this. I'm not cherry picking this by any means. So we broke above this high. Now this low right here is the responsible party, okay, for causing all this drama to break this high. So now if price closes above here, or closes below here, I'm sorry, we're going to be getting out. I can even make this even easier for you guys. Close below equals take profit. That looks really bad. Do white. There we go. And then I'm looking for us to break this high. Actually, really this one, because that's just like a wick there, which we did. So now we're going to drag this low up here, because now this is a protected low that has broke this high. Okay, boom, right here. Let's see if we close. We close. So see, this will be a little bit of a profit, not much, but that's the thing, is you just keep on, you have to build your rules. Do you want to sit here and just, let me see, what was this trade that we just took? What was the risk to reward? So the risk to reward was 3, right? So again, I'm giving you guys the framework, and you can build however you want with this. If you're fine with a 3 risk to reward, you could have just said, hey, when I hit a 3 risk to reward, I can just close there, right? Or if you're doing what I'm doing here, where you just want to get like the most of the move of the daily candle, you could just do what I was just doing there. And then you would just have to have more trades. But if you just want to hold that trade until you get to a 3R, 2R, 4R, whatever your goal is, then you can just do that too. So now let's just get right back into the market here and see when will be another good trade. So we're going to highlight this wick here. See, because this is that pullback, that low, and this is a bullish. You can even see this wick caused a bullish market structure. So now look what happened. We digged into here and we have another bullish reaction, but we kind of closed below here. So that's not super, super strong. So I'm going to wait for us to get back into this area and see, look at that. When you have a close below this liquidity footprint, it doesn't become strong anymore. So we don't want to get into somewhere where it's going to be terrible. So let's get these lines out of the way. We're coming back into this liquidity footprint right here. Let's see if we react bullish. Right above it. I want a really good, strong, bullish reaction. There we go. So really this was the one, but I kind of went a little bit too late. But hey, I don't want you guys thinking I'm cherry picking once again. So we're going to take this long right here. I'm going to put it below this low that was responsible for all this, because if we close below here, right, I don't want to get into the, I don't want to be in the trade anymore anyways. So we get tagged out. Here's the liquidity. So we're just waiting for a bullish reaction on top of this liquidity. This one's gone. And the liquidity I'm talking about is this little footprint right here. Boom. Stop loss below the low. And again, you could give yourself a risk management rule of, hey, I'm giving myself 4 trades max a day, 5 trades max a day. And then see, so if you lose like say 1, 2, 3, 4, 5, then maybe you're just done for the day. Or if you start to see the market structure starting to shift, then maybe you only take shorts instead of longs. So in this case, if we took realistically 1, 2, 3, 4, we could say, you know what, I'm done for the day. I'm just going to take a red day and let's move on to the next day. 8 o'clock. There we go. All right. So now, obviously, what's happened? Market structure shifted, and it was probably a good thing to just not just say, "Hey, we're going to write off that day as a red day." Now we're moving into bearish market structure. We broke below this low that make this new high. Now we're making lower lows and lower highs. We have point of control up here, acting as an area of resistance now. So now we're bearish. We got 2 for 2. Bearish on question number 1, which is what market structure are we in, and bearish on question number 2 is how are we reacting to the point of control. Now I'm just going to highlight little areas on the volume profile to see where is there just some little upticks so I can know when I drop down to the 1 minute. Let's go to 8 o'clock, go down to the 1 minute. And now we're only looking for shorts. Until market structure changes, I'm only looking for shorts. So I'm taking a footprint, little liquidity footprint off these pullbacks to the upside, okay, because we're making bearish market structure now, lower lows, lower highs. Okay, so when this pullback happens and it creates this sell pressure here, I wanted to see if we react in a bearish way, which we did right here. Okay, I went a little bit too quick, but we bounced up here. So this is going to be kind of a bad entry, but again, you guys get it. The real entry was right here. I just went a little bit too quick. So that was the entry. Okay, so now what happens? So we have this trade here. We pulled back. We made a new low. So now this high is an important high. This high is an important high because now look, this high was responsible for breaking this low. Now this high was responsible for breaking this low. So now if price comes up here, again, this is just me giving you guys an example if I were to trail my position and manage my position. If you were sitting here saying, you know what, I'm happy with a 3R, let's just see if this hits a 3R. And you could be like, okay, well, I'm going to set my TP to a 3R right there. Or if we break above here, I will manage the position and just let the position hit a take profit. Okay, right there. We have this high being broken. We're going to close it at a very slight loss. And then we're going to look for liquidity footprints. We have one right there. And we're going to see, do we react any bearish way? We do. Stale, stop loss above here, because this is the previous high that made a new low, and I don't want to be in that trade anymore. If we do get there, But again, this is me acting as if I were to do this. If you were just shooting for this 3R trade, you'd still be in it. I'm just giving you guys different ways that you can use this because the model's still simple. Are we going to look for market structure and then take the trade, or are we just going to let the trade play out to a static risk to reward? It's really however you want to do it. So now we break above this high, so then you would want to get out again. And now we're starting to move into bullish market structure, right? And it only takes that one trade. I know we had like a couple losses here in this back test. I'm just trying to show you guys like different examples and not make this too long. So now we're starting to shift into bullish market structure. We broke this high here, so now we're just going to look for longs. Again, we're reacting off of this area. You can see we reacted right here, so technically this was the buy. Stop loss below here. Let's get rid of that. TP anywhere there. And then now we're just looking for, again, bullish market structure to tell us when to get out. Or if you were shooting for a 3R, well, there you go. So in this example here, if you were shooting for 3Rs, well, you got stopped twice, but then you made 3R here, so you'd be up one for the day. Does that make sense, guys? Are you guys kind of getting it? Or are you guys like confused? Let me know in the chat if you guys are getting it or if you're still confused. But either way, you can see due to risk man. I know it says I'm down here, but that's just because I'm messing around with different ways of doing this. You can see that this is stupid powerful with just shooting for either one or the other. Do I want to shoot for a static risk to reward, or do I want to trail my take profit and just ride the daily move? So let's see if we were just to ride the daily move, how this would go. Yes, would be up even more if you were just trailing because the losses are small. Exactly. That's what I want you to get, D, and anybody else watching this, is your losses are going to be stupid small. Because if you start to if you close the trade at like break even or whatever because that low or high is broken very close to the entry, but then you let these trades ride because you're letting the daily candle play out, it can become very crazy. So look what happens. So now we're just waiting for this high to be broken. We still haven't broken it, okay? Wicks do not count. I want to see a closure above this high. So right now, this low is still not an important low. This low is okay, right? Because we did kind of do it, but we still need to break that high. So I'm still not even going to be, if I were to trail the take profit, I'm still not even going to be looking for it until right there, right? Until this high was broken. Now we broke this high. So now we drag this up here. We broke that high in there. So now if this low gets closed out, then I'm done. Then the trade's done. Okay, so now we made a new high. So now this low right here is an important low, and you just ride the daily candle. So you see, we took like 2 losses here, and now because you have to have that psychology, and again, if you are not a part of the Pack Trade Group, the link is in the description below. You can see in just one trade, I'm not even trading with like lot sizes as what you would, but you can just see with trading just a static 20,000, whatever the heck this is, you can see that I am now greatly in profit above all those little small losses that we took. So now let's go through the entire day and just see how we could perform just in this day. And then I'll wrap up the video because I don't want it to be super long. I want this to be a good video that people can refer to. So here's the low. We broke above this high. If you guys have any other questions, because I really do enjoy doing these live, because again, I'm showing you this live. I don't want you to think I'm cherry picking stuff. Let me know. So now if we break below here, we're taking profit on here. You can see we reacted. Oh, all right, we closed. So now you just close the trade. And then if you were to trail, this would have been a realized 3.38R trade. Or if you were sticking to a 3R or a 2R or a 4R or 5, I mean, you can play with this whatever. So now let's move on to the next day. This day would be a really good Green Day. It's a really good band, by the way. Does anybody like Green Day? Gonna love this too. Nice. I'm glad you guys get value from this. All right, let's go on to the next day. Obviously, we're making bearish market structure, lower lows, lower highs. So let's go to 8 o'clock. Here we go. 8 o'clock, lower lows, lower highs, right? So question number 1, are we bullish or bearish as far as the higher time frame market structure? So right now, this low on 1 hour has still not been broken. Okay, so we need to break this low in order to have a bearish bias, I guess you could say, for looking for shorts. Here was the high. Here's point of control. How is point of control reacting with price? Right now, it's acting as resistance to tell us that, okay, again, we're probably going to be bearish. We do have some volume up here. We have some volume right here. And all I'm doing is looking for where these upticks are on the volume profile. So now we're going to go to the 1 minute chart. And we're only going to be looking for shorts because that's what market structure and price action is telling us. So we already kind of missed this little opportunity here. So let's look. So we have this pullback and this pullback. Let's see how we react to any of these little footprints. So we closed above this one, so I'm getting rid of it. We're about to close above this one. Okay, we still haven't closed outside of this footprint, okay, because if this was going to be a valid short, I would need it to close below here. So until it does that, it's not valid. So now we're just going to wait. Here's a footprint right here in the middle of this point of control that we drew on the 1 hour. And we already knew that the point of control is acting as resistance. So what are we going to do now? I'm going to take a short stop loss above these highs because why am I doing that? Because if we hit my stop loss here, we definitely don't want to be in this trade anymore, right? So now we're going to let the trade play out. So now we have started to make a pullback in this downtrend, okay? So this high has created a new low. Now we need to break this low right here for us to then trail that take profit. And then you can see we got stopped out on a right before market open. So now let's see if we get a bullish. So we broke on through here. So I'm going to keep that point of control up from the hourly. Just want to get rid of that. There. So I want to see how we react to that liquidity footprint. We got a nice little short right here. I went a little bit too quick again. This was the trade. I had kind of a bad position. I went replay mode there, but I should have went there because we had a bearish reaction. So now we have this low being broken. So now this high is the responsible party for making this low become broken. So now all we're doing is, obviously, if we break this high, it's pretty close to our stop loss anyways. So we're just going to see if that gets broken. Okay, no worries. We're starting to shift bullish because you can start to see we're making higher highs, higher lows. So we probably don't want to be in shorts anyways. And again, that's fine. So now look what the point of control is doing. The point of control is acting as an area of support. We can go to the 1 hour, see how the 1 hour candle is now reacting to that volume profile. Let's let it load. You can see we've already tapped into this area up here. Okay, so now we have broken through. So now the buyers are starting to take control. That's why we got stopped out a couple times. So now we're going to wait, and we actually have a bullish reaction off that point of control anyway. So if you did want to take a trade, this could be a valid trade. Stop loss below the previous low that was the responsible party for making the high, which would be there. And then we're just going to ride the daily candle. We're going to let the trade play out and see what happens. So now we are, and again, you guys are seeing this live. We took what? 2 losses here. It erases the trades when you switch time frames. But you can see here we took 2 losses, and now we've already made up both of those very small losses from just one trade. Again, sticking to the model, not over trading or revenge trading or anything like that. And then again, if you're shooting for a 2 or a 3 or whatever, you can just keep it at a static 2, 3, 4, whatever you want. So this will be a static 3 risk to reward. We'll just highlight that. But how I'm going to do it is I'm just going to wait for one of these market structures to be broken to write out the price. So you can see here, this was the responsible party, this low, for breaking this high. So I would be waiting for this low to be broken to get out of the trade. You can see we have reacted from the top of this huge area on the 1 hour time frame of the volume. But again, I'm not looking for reactions. I'm literally just looking to see, does these highs or do these lows get broken? And if they do, that's when I should get out of the trade. So you can see if you're shooting for a 3, we've kind of reacted off that. But for my position, I would be out now because now we have broken below a key area of market structure that tells me I should probably be out of the trade. And now if you were still wanting to get into another trade, you could just, again, wait for price action to tell you when to get in. You have a liquidity area right here. Let's get rid of this. So this was that trade. So this was a 1.13, by the way. So this trade that just won. So now you have a liquidity area here. So now we're just waiting for another bullish bounce, which we got right there, to get us into another position. So if you wanted to take another position, stop loss below that liquidity area, and then you're just riding that move. You'd get stopped out again, but then we have another bullish reaction. So again, you just get right back in. So you can kind of see how it's a little bit higher frequency and you have to deal with the losses, absolutely. But if your mind is okay getting stopped out like this because you're taking very small losses for pretty large wins, like in this case, right? If you just do the ratios, this is a $7 loss and we gained like 18 bucks here. So the losses are very, very minuscule when it comes to just letting these trades play out. So now you can see we've got into this trade. Now we're just waiting because since this high was broken, we're waiting for a pullback to happen because those are normal. And then once this pullback happens, we're then going to be letting the price, we're going to be letting price tell us when we need to get out. So here's the pullback. Okay, so now this low needs to come up here and break this high. So here's the high. Here's the low. This low needs to break this high. If we close below here, I'm not going to get out of the trade. But if you were shooting for static risk to rewards, let's see what you would be doing. So if you were just to shoot for, let's say, a 3, here's the 3. But see, I would still be in this trade because of the fact that we're still, oh, wow. Well, this will be pretty, stop loss is, depending on what your stop loss is, this is the beauty of futures. You never get split, but let's see. So now we got this high. So now this low down here that got stupid close to our stop loss, it is now broken this high. So now we're just going to wait for another pullback to happen. Okay? Another right here. Boom. So we have a low that made a new high. So now if price gets below here, or again, if you're shooting for a 3, you'd have already hit a full take profit. So let's get that out of the way. So now this low has to break this high. Are you guys getting this? Are you guys like actually excited to try this out and backtest it? This is pretty cool. Okay, let's see if that low makes a new high, and it does. So now this low made a new high, so we're just letting the position breathe. Letting the position breathe. And again, if you were happy with 48, let me look at this. You guys seen all the little small losses that we made? And I'm telling you guys with so much passion inside of me, you got to do what the 10% are doing. You can't think like the 90%. The 90%'s already clicked off this video. They're like, oh my God, he's taking like 12 losses. What the heck? And then look, it just takes this one trade and allowing your psychology to let it happen. Look, focusing on what matters. What do? We focus on what matters and then just let the trade play out. So now again, this low has to break this high. So here's the high, here's the low. So this low is not important yet until we break this high. So do we break this high? We do not. So now this low is still in play. Technically, this low is in play. Because see, look, this low we pulled back, made a new high. So now we're just seeing if price closes below here. And now it does. So now, boom, price closes, and now we're in the green. And I mean, a beautiful trade. I mean, this was, if you were to calculate this in R's, how many? This would have been a 4.59, or again, if you're shooting for a 3, you get that. Let's move on to the next day. This is Wednesday. Let's do a full week of November. Got to go a little slow here because my computer likes to lag. There we go. All right, so let's delete all the drawings. Only thing you got to ask yourself, what is the current price action? Not all of this. What is the current price action market structure? Well, you can see here's a low and here's a low. What is that? That's higher. Here's a high. Here's a high. Higher, right? We're bullish. And now, so answer to number one is bullish. Answer to number two, what is price doing in relation to the volume profile and the point of control? We can see right now it's acting as resistance. So now this is a unique scenario where you're looking for a bullish trend, but you're having a resistance off the point of control. So what do? You've got to think logically. Well, I don't want to take a long if there's a clear resistance. So what am I going to wait for? I'm going to wait for a breakout of the point of control. That's why we're highlighting it here on the hourly. And we're also going to highlight this area. You guys see how easy this is? So now, I wanted to do this not to like crowd up YouTube with all these other strategy videos that I want to show you how stupid easy trading can be. Where we're drawing rectangles on a chart and we have one singular indicator that's free, and you can still extract money and value from the markets. So now we're reacting off of the point of control. We're bullish. So I would be waiting for a breakout of this point of control before looking for a bullish play. Because you can see here we're reacting off of it. And look at that. We have a close. We close below point of control. We have a liquidity footprint here from a bearish candle. So let's see if we react in a bullish way off that liquidity. And look at that. We tapped into that liquidity. Now I want to see us tap into this liquidity, close above this point of control. And that would be, in my opinion, a valid long. Okay, so we're now making lower lows and lower highs. So we're just, again, waiting, sitting on the sideline. We have our next major our next major footprint right there. So let's get this footprint deleted because we already closed below it. It's useless. We had a pullback here that made a little footprint. Here's a really nice one right here. So let's get rid of that one. Big one right here. Well, let's keep it now because we closed below it. See how active it kind of is though? Boom, right there. So we reacted off this footprint, and it doesn't matter how big or small it is. These little wicks here and these impulsive wicks tell us there's pressure here objectively. So we're going to take that long, stop loss right below there, and we're going to let the trade play out. We're going to let price tell us. Did you guys hear that? Price? I can't even talk. We're going to let price tell us when to get out of this trade. So we have this low, again, repeating. We have a high that got broken, so now this low is an important low. If we close below that low, I'm getting out of the trade. Here we have a low. We broke this high, so now this low is important. Bonds, let me see it. We'll do some bonds after this, Danny, all right? Let me play out this week, and then I'll do a couple trades on bonds, but I don't want this live stream to be super, super long, or else people won't watch it. So again, we got a low. We got a high. Do we break below it? And again, this is just me showing you trailing this take profit. Look what happened. If you were shooting for a static risk to reward of, let's say, a 3, you would be you'd be done. You would be done, you know, or whatever. Hey, good seeing you, Alpha. Thank you for tuning in. Again, this will be recorded, so if you want to pop back in, you can watch it. So now if you were managing the trade, boom, done. This will be a beautiful green day, right? Now, this is another thing that I want you guys to understand, and people are going to have so many different results. In this scenario right here, we just extracted value from the market, 1.73R, or if you were shooting for a static 3R, you need to understand when to be done for the day. Obviously, if I was to do this, I would be done for the day. Either way, if I had a 3 or if I got just one trade and I never lost any other trades, you'd be done for the day. So I'm going to call it a day on this one. And now we're going to go to Friday. And you guys are seeing this happen live. There's no edits. There's no tricks. I had one of the audience members tell me an asset to pick out. There's absolutely no way I could be predicting or tailor this in any way, shape, or form. And we'll do bonds real quick for just a couple days. Okay, well, this is the last day, so Friday. So let's delete all the drawings. All right, so question number 1. What market structure are we in? So let's look at previous. So we were bullish, and then what happened? We had a low break this. We had a new low that broke this low. This high was the responsible party for breaking this. So now we're going to have these two here. So right now we're bearish, right? Because we could just be coming up here and making a lower high to then start making bearish market structure. So right now, answer to number one for market structure, because we have made a new low and then another low here making a lower low, I am objectively bearish. I don't care if it looks bullish on a 4 hour. I don't care if you just zoom out and you're like, but Austin, look, it's bullish like this. I'm looking at the day because I am a day trader. I am not looking at swing trading a daily candle. Okay. So we can see that objectively we are bearish. How are we reacting off of the volume profile? We have bounced off of it, and now it's using the volume profile as a level of support. And some days may not be tradable. That's another thing I want you guys to understand is not every one of these days could be a tradable day. Like in a day like this where you're getting mixed signals, you could just call it a day, right? You already had a green day or a green week. You just seen here, we won this day, we won this day, we broke even this day, we were red on Monday. I mean, you can even see right here, I'm back testing it with fake money. I mean, it is objectively would be a green week. So you could say, you know what? If a setup happens or if we start to turn bullish, maybe, or I could just call it today. But let's just back test, like, and let's see if any models do present themselves. So what I would do in this case scenario is I would see, all right, are we going to come back down here or in some way, shape, or form start making higher highs, higher lows on a smaller time frame? And maybe I could ride the candle up to take buys, or are we going to lock in a lower high and then we're starting to look for shorts? Let's go to the 1 minute. And for right now, until we start to make bearish market structure on the 1 minute, we'll be looking for longs because we use this point of control multiple times as an area of support. Look, we had support here, support here, support here. These are all wicks on the hourly, all right? These are 1 minute candles. So until price action tells us we're bearish on the lower time frame, we're gonna be looking for longs. So now we already have been having a pullback here. We are actually would start here at 8 o'clock, and you can see, let's see, would we have gotten into a trade or not? So we're waiting for a pullback to happen. Boom, boom, boom. We'll draw this liquidity here. So here would be the first trade, technically. Stop loss below here. You can see if you're shooting for a 3, you wouldn't have quite got it, but you would be at a slight loss. Here's the low that made a new high. We closed right here, so you'd be out of that trade for a little bit of a loss. Again, I'll be very transparent with you guys. And then we close above here. We have this new liquidity area right here that we react bullish to. So this will be your second trade. And your second trade would have been a beautiful trade. Been a beautiful trade already. But let's just act like, you know what, we slept in. All right, we slept in, we didn't see it. So let's see what the market gives us. So now we have a pullback footprint right here. Let's see if we react bullish or if we melt through it. So let's delete it. So now we got to come back here or form a new one. We formed a new one right here. All right, we tapped into this footprint and then closed bullish. So that would be a rule, or that would be rules for taking long. We get stopped out. No big deal. Stop losses happen. They are our insurance policy, and they are totally fine to get hit. All right, so now if this low that was responsible for making all these highs gets broken, we're going to probably be bearish, right? We're going to have that objective bias of being bearish. We closed very briefly above here, but I want to really get a good bullish, like that one right there. I want to get a really good bullish reaction. Stop loss either here. Now this one could be an either or, right? You could either do that one below this liquidity point, or if you really wanted to get a little bit more risky, you could go below the actual low, so that way you have a little bit more protection, right? Buyers could step in. See, in that case, you get stopped out. So now, again, the only thing that we are looking for across all this is, do we break this low? And if we do, we are going to be bearish. We have liquidity footprint here. All right, we reacted bullish off of it, so that would be a long. Technically, this one would have been it, but again, I don't want you guys to think I'm cherry picking. So I'm giving you guys terrible entries. That's the funny thing too, is we're green, and I've gotten in like terrible entries. Let me get rid of this. All right, so now we're bearish. So now we're just looking for shorts. And don't pay attention to this number. Like, I'm just sitting here taking like every trade possible to show you guys different examples. So now we got a footprint right here. Got a footprint right here for the sell side. We're looking for bearish trades. That would be one right here. I went a little bit too quick. Stop loss above the high. So see, that would have been, I missed it, right? But we reacted off this footprint. Bearish trade right here. Stop loss above that high. If you were shooting for a 3, great, you got it. Let's see what would happen if we were just to trail it. Sadly, I didn't get it into the back test here. Replay mode. If I go back in replay mode, it's going to reset like that. See? So I really hate how TradingView is. So now, if you were to trail this position, again, think about it like this. We took 2 losses here, or 3, I don't even know how many, very small losses. Don't even matter now because you're sitting in such nice profits with this trade. So now we have a high that made a lower low. So now if that high gets broken, you are in fact out of the trade. Or now look at this. We have another high that's trying to make another low. So let's see if that happens. But until then, this high is the one that we're going to respect. Right here. Oh, nope. We're going to close now. Right there. So we would close right there. So again, if you were shooting for a 3, you would have got it. In this case, this would be a 2.56, and you could be done for the day using good positive risk management. So in this whole week, I just showed you guys, you'd have had a green week from a random asset that you guys chose. So let's do a couple examples here. Danny says do bonds. So let's do, what is it, ZN? That's the, which one's the bonds? ZB? There it is. All right. Squish it down here. Let's go back. Let's go to right here, Monday, 06. All right, 2 more examples, and then we're going to call it a day here. All right, all we're doing, first question is we are looking for market structure. What's the answer to the market structure? Let me make this small here. So we can see we have made a lower high and a lower low. This low right here has still yet to be broken. This low has still yet to be broken. So we need to make a lower low in order for us to continue this bearish market structure. This high was broken. So now what I'm going into this session thinking is if we had this high right here get broken, and then now we have failed to make a lower low, we could be starting to flip bullish. So now let's see what the volume profile is telling us. Volume is telling us that we have used this point of control as an area of support. So now you can have the educated guess of saying, that's all trading is, educated guesses, educated guess that we're probably going to start having some bullish momentum in the market. So now let's see what happens. So let's start looking for some long opportunities here. Let's just stay consistent here at 8 o'clock. 6, 7, 8. All right, well there we go. See, we let the market play out. We actually melted through point of control. So now we are still bearish, right? We broke that low. We're now coming down to make this low. So now we are still looking for shorts, or we are now looking for shorts. I'm sorry. I've talked a lot today, right? Oh no. TradingView, man. TradingView. All right, well, let's go forward a little bit because I can't go this far back with treasury bonds. All right, you guys are just gonna have to trust me. I've already proved you guys don't cherry pick stuff. So we're just gonna go back a little bit more recent. So that way I can go to the 1 minute time frame. Read all that. All right. Okay, what are we in? We're in a bullish market structure state. Answer to number 1. We're making higher lows, higher highs. All right, all that good stuff. So now we're just seeing, okay, how are we reacting off of point of control? Let's let this candle play out. All right, sweet. So we came down here, we broke this point of control. We can see When we highlight that, we can see there's a little bit of support here. There's support here. So now, cam went dark. Oh, thank you, D. I'm in focus here. We go to the 1 minute chart, and we're gonna see. All right, dang, these candles suck. Candles are terrible. All these little gaps from bonds. All right, but it's the same thing. It's the same thing. We can still see the structure ever so slightly. So again, looking on the 1 hour, we broke through that point of control. We are still in a bullish state. The thing that I'm looking at now is this low has in fact been closed. So if we pull back into a liquidity footprint, I would be looking for some shorts because now we broke below this low. So now we're going to go to the 1 minute time frame. It's probably going to be a little bit challenging, I'll say, with bonds because these candles are just terrible. And there's not a lot of wicks to really work from. So let's just wait for a pullback. Yeah, this may be a little difficult to backtest. I'm not going to lie. All right, right here. Boom. We do have a footprint here, and we did react bearish to that footprint. Okay, and we have came all the way down here with that local support level. And if we go to the hourly, that's this support level here that I'm talking about. So let's take a position here, stop loss. Ooh, it's even, look at that. Yeah, this may be a little difficult to back test, but we'll play with it and see. So now again, we broke this low. So this high, pretty much where our entry is going to be the responsible one to see if we close above there and get out of the trade or not. Okay, so now we came back, we pulled up. Here's the high. We need to break this low. Okay, so now this low was broken from this high. So if price closes above this high, man, I'm trying my best for you guys. These candles are terrible. if candle closes above this high and then boom, so this low was broken right here from this high. So now if we close above here, profit, or taking profit. And a really bad candle. All right, right there. Okay, so we'd close out right there, and then that would be from a risk to reward perspective, that would be a 1.25 gain. So not a bad trade. So this would be a nice green day. So then you just move on to the next day because that's how risk management works. We are now making lower lows, so now we're starting to look bearish. Let's go to the next day. Do one more for you guys. Drop a like on this live stream if you found this helpful, if you kind of excited on backtesting this for yourself. Let me know. 7, 8. All right. Let me get rid of all this. Okay, so here is our low, 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 high, and high. This high was broken. So what am I looking for? I'm looking for bullish. I am bullish on answer number 1, which is what's our market structure? Bullish or bearish? Answer number 2, how are we reacting with the volume? Right now it is looking like it was a resistance. We came up, we came back down. It's kind of just an area of chop right now. We can see there is a major area of resistance right here. We kind of bounced off that. So now we're still bullish, but I want to see how we use this as a support level in the 1 minute. It's very hard to look at this and use this as an area with T-bonds because the candles are just terrible on the 1 minute. So I'm really trying my best here. So we got area here, area here. Let's just wait and see if we get a pullback. Okay, we get a pullback, some kind of candle pullback. All right, so we're just waiting, waiting, waiting. Do we get a pullback in there? We get a pullback right here from this liquidity. Let's get rid of that. Yeah, you probably shouldn't trade this with bonds, I would say, just because the candles are terrible. Look at that. Like it's really hard to. There's no candles. You can't really do anything. All right, but what we can see from a market structure perspective is we did react off this area of resistance. We are still rejecting off this point of control, which is right here. So now let's go back down to the 1 minute and start looking for short because we have now rejected this. We have now rejected this. So now we have this little area here. So let's see if we react to it in a bearish way. Here's another look. And again, I don't even know if these are bullish or bearish candles. These are just terrible candles. So I guess you could say this was the short. I guess you could say that was the short. I don't know. Yeah, I mean, it's just terrible. I don't even. Yeah, this is bad. But all right, we're just not gonna do T-bonds because these are just bad. But okay, you guys get the point though. So I just want to let you guys know this cool little strategy that I hope you guys got some value from. And if you did, again, drop a like on this video. Comment down below if you are excited and if you want to use this with a certain strategy or a certain asset. Let me know. This could be something that you just add as far as confluence to whatever model that you're using. You can really do this in so many different ways. But the point that I want you guys to understand is no matter what strategy you do, I even have a few strategy videos here on my YouTube channel. It doesn't matter if you don't stick with it, if you don't let your psychology always dictate, like if you need to make sure your psychology is the one that's dictating the trades as far as your emotional intelligence and not your emotions as far as just, oh my god, I see a little bit of red, or oh my gosh, I took a loss and now the strategy is useless. You have to stick with it week over week, month over month, quarter over quarter. This is something that is very powerful, and I'm probably personally going to be doing it probably for my afternoon sessions with the Pack Trade Group. So if you want to join that, link is in the description below. Hope you guys have a wonderful rest of your day. I did 2 live streams today. Like, come on, that deserves a like in and of itself. Love you guys. Thank you so much for watching. As always, stay grinding on your goals. Never let anyone tell you that you can't do something they have never done themselves. And I'll see you guys later. Bye, guys.